Welcome to the Midday Market Update for July 7th. Hopefully everyone had a great 4th of July. We're back to work today. Myself, Kevin Hill, with Michael Vincent, as always, on our twice weekly Midday Market Update.
It is. Welcome, everybody, and it's interactive. So get your comments and questions in on FreightWaves LinkedIn, Facebook. Go to tv.freightwaves.com, right?
Yes, exactly right. So, yeah,
and
LinkedIn,
subscribe
Facebook,
so you can watch
comment.
these, check the back shows, etc. It's going to be a good show today.
It is. It's going to be a great show.
It is.
It definitely is. We're gonna kick it off.
Did you have a good 4th? I didn't see you yesterday.
I did. I did have a good 4th. It was nice and relaxing. I know you did because you posted it out on LinkedIn. How much did you? So you spend like 20 grand on fireworks?
No, it wasn't that much. There's a bunch of people that put money in. It's amazing how what you can put together, but it's fun.
I know. I know. Yeah, at the bottom of the hour we have Lawrence Alvarado, who's the CEO and founder of WareCap, which is a marketplace for warehousing. Right. Followed by at 12:40, Tyler Robertson, CEO of Diesel Laptops. Some really good news coming out of that with COVID testing. But first, we'll do the news headlines with Andrew Cox, and then over to the freight markets, where we'll talk to Zach Strickland, our Director of Freight Market Intelligence here at FreightWaves. And
excellent.
Yeah. So, and then we'll
find
talk.
Out what's going on
we're going to talk a little bit about. Yeah, we're going to talk a little bit about the PPP. And
we are, right? So we've got the database up now. Link on FreightWaves.com.
Yeah, so we'll go through that after the headlines and kind of go through how to search the database that is up and running on FreightWaves.com. But first, we have Andrew Cox here with today's headlines. And we have something in machine learning and AI from Keep Truckin' to start us off, right?
Yeah, Kevin, this was brought to us by our tech reporter, Vishnu. He says that the fleet management company Keep Truckin' has rolled out a roster of new features on its platform intended to make the lives of fleet managers and drivers easier. These features are a part of Keep Truckin's truck safety suite of solutions designed to make safety more preventative and proactive. Kelly Hansen, the senior manager of technology partnerships at Keep Truckin', pointed out that these features help fleets identify their high-risk drivers and fix driving behavior before it's too late. She says, ultimately, it is about taking action by coaching or managing drivers to improve behavior, and in worst cases, removing them from the business if they pose too much of a threat of a nuclear event happening. Keep Truckin' has introduced a tool called Deep Learning Interface, a feature that powers video overlays. This is a machine learning tool that can identify risky driver behavior, like close following. DLI flags instances where drivers do not maintain adequate distance from the vehicle in front of them, with a 50-50 possibility of getting into a wreck. Customers with Keep Truckin' smart dash cams can leverage AI-powered videos as an effective coaching tool to identify and correct unsafe driving behavior. While previous solutions were mostly about detecting unsafe events, DLI went a step further in visualizing these events for evidence-based coaching.
I think this is really interesting technology, and we've talked about this before with other people, and I forget who it was. It might have been on What the Truck, but asking people about the use of the data from the telematics, et cetera. And I think somebody said it was less than 35% using the data, what they thought would be effectively or for safety. And I think this is a really big thing. The proactive coaching, right? Do you agree?
I definitely agree, and part of the issues with the amount of data that comes out of ELDs is, and the underuse of that, it's very complicated to take that and have actionable steps that you can take and analyze. And most trucking companies aren't staffed with a team of data scientists that will go through.
And nor do they probably have enough stats to really look at and analyze these trends of what causes this and what causes that. But we're starting to build that, so start using it, right? It really makes sense.
Yeah, it does. So if that can be aggregated, analyzed, and put out in a very useful way, it's great.
Yeah, it's
exciting
excellent.
things.
It's excellent. And the other thing that occurs to me, is this proliferation of this type of technology and the use, and you build up these databases, et cetera. Do these type of things become standard safety equipment?
I think so.
Or mandated even? Eventually?
I think probably become mandated, and our next story kind of leaks into that as well with with the state of the commercial insurance and trucking insurance, I know we had an article, John Kingston, yesterday on AM Best downgrading commercial insurance, and a lot of that goes to trucking because of accidents and nuclear verdicts. And part of that is Brian Strait reports this morning from a TCA conference about the state of insurance and some commentary from executives. And where are we on that, Andrew Cox?
Yeah, Kevin, Todd Reiser, the Vice President of Transportation for the Lockton Companies, said premiums on excess insurance, this is the insurance that covers the insured above specified primary or self-insurance limits, have increased between 300% and 400% this year over 2019, which is resulting in trucking companies making decisions on how much they want to purchase and how much they can afford. Reiser said insurers are starting to ask questions regarding mileage driven within various states and regions that carriers operate in, including and specifically regions that are notorious for high verdict areas. Even with rising premiums, though, Reiser said insurance are not making money. According to the Conning Commercial Automobile Mid-Year 2019 report, the combined ratio in 2019 for commercial auto was 110. This is the 8th straight year of over 100. This is much like the operating ratios that we use in the trucking industry, indicating any number over 100 suggests a financial loss. Contrary to popular opinion, the safety and insurance experts said there are things carriers can do to keep rates manageable, or in some cases even lower premiums. Carriers should start by trying to understand what is driving insurance premiums higher. Reiser cited several factors. Number one, the carrier's inability to find good drivers. Number two, the aging and unhealthy driver workforce. The third big one is driver distractions, both from commercial drivers and from automotive drivers. And then, of course, the big one is litigation. He also noted declining road infrastructure as a major source of rising insurance premiums. Chris Mokele, Vice President of National Accounts for Underwriter National Interstate Insurance, advised carriers to manage their risk better through proactive coaching, which is what we've seen Keep Trucking trying to do, and training and not cutting any corners. He also advised the use of cameras, both inward and outward facing. He said carriers should build a top-down safety culture, deploy technology smartly, and follow an aggressive claims management program to develop strong partnerships with insurers. They should also determine how much risk they're comfortable taking on themselves and determine what the correct liability is for their operation.
Can't argue with that advice, can you?
You really can. It kind of feeds into the previous story on safety and increasing safety.
Yeah, it absolutely does. There's so much to unpack really from the story. We could talk forever on these things. Really, you absolutely could. Andrew, I'd love to hear your thoughts on this. But some of these things in here, insurance companies are starting to ask questions like regions and states and where you drive. So does that start to matter in the rates that carriers charge? Because if they have excess miles in certain areas, their insurance premiums might be higher because they drive in those different areas. Is that a possible outcome from that?
It is, yeah, it definitely is. What do you think, Andrew?
Yeah, I mean, I could see these costs getting passed on to the final consumer. I think carriers, if they have to pay higher insurance premiums to drive through Georgia or Texas or Louisiana or Florida, areas that are notorious for high nuclear verdicts, I can see them trying to charge a little bit of a premium there to cover their cost.
Yeah, that's the other one you put out there. The very thing that stuck out to me when I read this and was going through this was the facts of the case don't matter as being one of the big things.
No,
it's huge that's an issue.
No, it is an issue because facts oftentimes don't matter in nuclear verdicts. It's more of a punitive and legal defense strategy or plaintiff's attorney strategy, I should say.
Yeah.
What do you have on that, Andrew?
Well, from our nuclear verdicts paper that we did back at the back end of 2019, we studied a lot of the national data on deadly injuries and deaths, on the commercial side of things, and you can see that over the last 5 or 6 years, you've seen a steady decline in the amount of deaths and the amount of injuries. So the way he says that, Reiser does, where the facts of the case often don't matter, is overwhelmingly in a trend. We've seen things get safer for both automotive drivers and for CDL holders, yet we're seeing insurance rising each and every year. So there is a disconnect right there.
Yeah, I would think adopting of the technology that we talked about would help in litigation in defense.
Yeah, it
could
definitely
also
is.
possibly help the plaintiff as well. But if you've got a good solid, like he said, Chris, how do you pronounce his last name? Mikole? Or Mikole, as his advice, which is sound top-down, employ data smartly, wisely, use it for coaching, etc. If you're employing that type of stuff, obviously that's the right thing to do. It's solid advice. But wouldn't that play into your premiums too? If you have this now, you've got all this data and this proactive coaching type of stuff. Wouldn't that possibly affect premiums if you're proactive about this type of thing?
And part of that is the downside of having all this data, and it's something Andrew and I learned on the paper we wrote, is that you become responsible for this data, whether you use it or not. So if you have knowledge or should have knowledge of breaking incidences and everything that you get, but it just sits on your computer and you don't analyze it, and you don't take proactive action on it, the plaintiff's attorneys will come
negligence.
It'll be negligence, right? I mean, that's something
you knew
that
this person was a risk. Here's the data it had there. You failed to do anything with it. So, yeah.
Yeah, so there's some steps in tort reform. I know Louisiana just passed, I think with a supermajority, a veto busting majority, a story that we covered a couple weeks ago whenever it went through. I think it's finally all the way through to where theoretically it can be vetoed. That puts a cap on that. Type of stuff. Our next headline is the drug testing and clearinghouse and kind of flexible rules being extended on that. What do we have, Andrew?
Yeah, Kevin, this is brought to us from John Gallagher. He says that carriers struggling with their random drug and alcohol testing obligations because of the coronavirus pandemic can expect enforcement leniency from federal regulators. The FMCSA announced it may exercise discretion in enforcing minimum annual percentage random testing rates, as well as the requirement for employers to spread testing dates throughout the calendar year for carriers unable to meet their requirements. As the nation engages in a phased reopening, the pace of return to normal operations will vary across the country, the FMCSA stated Monday. In some regions of the United States, motor carrier employers subject to controlled substance and alcohol testing may be unable to comply with certain testing requirements due to the ongoing impacts of the emergency. The driver selection rate for controlled substances must continue at 50% of the employer's average number of driver positions and at 10% for random alcohol testing for the calendar year 2020. The FMCSA increased the annual random drug selection for drug testing from 25% to 50% late last year. The change was estimated to increase drug testing costs for the industry by $50 to $70 million per year.
I wonder what effect this might have on capacity in the second half of the year if a lot of these random drug testing are pushed off, and taking 12 months worth of drug testing and kind of filtering that down into 6 months. So you have
is
more
that what they're saying
testing.
they're going to do? Is just you still have to get the same amount done in a calendar year? Or,
I believe so. At least
that's interesting.
I know the last time that they did flexibility, that was the case. Did you get that from this article, Andrew? Is that correct?
I'm not sure I heard your question correctly.
So the question was, if they're easing the restrictions now, are the carriers still on the hook for doing random testing at a certain number of random tests still by the end of the year? So in other words, they may not have to do 25 or 30% of them right now that they normally would do in the first half of the year. Do they have to make that up in the second half of the year?
Yeah, it seems that they're still going to have to drug test, and the people that are, I would assume the larger carriers that are more, that are able to do so, they may not get the leniency of some of the smaller carriers. I think this is aimed at really those who need it. It's, again, a flexible ruling. That's the main idea here, is that the FMCSA will be flexible in this, but I think they're still going to require these drug tests to get done. They're just going to be able to spread them out further along throughout the rest of the year.
Yeah, so,
gotcha.
So you're kind of squeezing it into a shorter time frame, which means that you're probably going to have, negative or positive tests, more positive tests in a shorter time frame.
Possibly,
if you go by historical numbers, right? So I wonder what if any of that will have an effect on capacity. But switching to the ocean now, we have some international international drug
apparently
smuggling.
they need more drug testing.
More drug testing. So, what do we have on this bust, Andrew?
Yeah, Kevin, another cocaine bust on the high seas. Maersk said it is cooperating with Mexican authorities after 2 men and a little over 100 kilos of cocaine were found in a container on board the Svenborg Maersk at the port of Manzanillo on Thursday. Maersk's senior press officer said, "We can confirm that authorities at the terminal are conducting an investigation after allegedly 2 men were found hidden alongside narcotics in one container. We are collaborating with the Mexican authorities in charge of the case. As a matter of policy, Maersk will not comment further while criminal investigations are ongoing." The Office of the Secretary of the Navy in Mexico said officials had been tipped off that the Svenborg was carrying illicit cargo and that 2 men were arrested. The names of those individuals have not yet been released. At the time of the inspection, 2 male persons who did not belong to the ship's crew were located inside a container, as well as 2 packages wrapped in black and red plastics that, due to their characteristics, did not correspond to the merchandise transported. A translated statement from the Mexican government said, "Each package contained 45 bricks that were tested positive for cocaine." The Mexican official said the total weight was 102.5 kilos, or nearly 226 pounds.
It's interesting, right?
It is. It is.
So the 2 guys were apparently stevedores.
Yeah.
I'm not sure. I'm not familiar with all the operations at Manzanillo port, but so they weren't Maersk employees, is what it sounds like. They were from the stevedoring company, whoever that was. So does that mean that they were coming out of the country or being smuggled into the country? Which way it was going, et cetera? I don't know.
I don't know either. It's a mystery.
It really is, and the interesting thing is,
right?
The interesting thing is when I was in ocean shipping, one of the things that was interesting to me was that it is the onus of the liner service to prevent stowaways and this type of stuff to happen. So even though they're not employees, Maersk's security measures and so on and so forth have to prevent this type of stuff from happening. So even though they may not have any employees involved whatsoever,
it's still the responsibility to have that security and have that in line.
Yeah, absolutely.
Yeah. Well, let's take a break from the headlines. You can find all of those headlines and much more, especially on the PPP and other breaking news on FreightWaves.com. And we're going to go to the freight markets now with our Director of Freight Market Intelligence, Zach Strickland. What do we have in the freight markets today?
So the big debate was whether or not we were going to see these, excessive volumes last through the big holiday break period, or were they going to start to collapse? Well, the answer isn't 100% clear as of yet because it's only been a few days, but it does appear that volumes are starting to show signs of trending slightly down. They're still well elevated year over year, and even over 2018, with the outbound tender volume index exceeding 10,000, 11,000 even, while we're going through a holiday period, which is unprecedented. It's effectively about 20 to 25% higher than what we would normally expect this time of year in terms of seeing our tender volume index kind of move through this holiday period. Shippers tend to cool down quite a bit on their activity, but the fact that we're still seeing volumes still well over normal seasonal averages is still a good sign for the freight market itself. However, it does appear that we may have peaked in terms of seeing the highest volumes potentially of the year, depending, but they are starting to show a slow, gradual degradation in terms of outbound volumes, and it has had, of course, a noted impact to capacity. Tender rejection rates now starting to fall as well, coming down under 16% where they were just this time last week.
Yeah, pretty fairly normal stuff, though, right, Zach? It normally takes, 4, 5, 6 days for that after the 4th trough?
Yeah, it takes, it has a 7-day moving average cycle. It cycles through, but you can see within that trough, you can see certain variances in there. You can see the direction of the freight market. For instance, Memorial Day week, we saw those volumes increase throughout that period anyway. So right now we're starting to see, at least through the first day or two, volumes have now taken 2 sequential declines.
Yeah, because usually they drop to a bottom and then there's a slow rise throughout like a kind of a step rise, and then on the 5th or 7th day you see that shoot right back up. But right now it's continuing to drop, which is not what would happen. At least it hasn't happened in the history of the OTVI when you look at it seasonally.
Right, and the important thing here is that we really are watching for trends and change of direction, whereas leading up to the 4th of July, we saw just a basic consistent rise. I mean, from early May till the 4th of July, trucking volumes just continued to just stack on top of each other. It took a while for tender rejections to start to increase with it. It was almost mid-June before they really had a notable increase above 6%, and then they ended up above 16%. What we would normally see at peak about that time anyway. We just didn't know if it was going to hit 20%, you know, like Kevin talked about, or kind of stay below that. And it looks like, at least for the time being, we're seeing those rejection rates climb back down. Some spot market activity still remains heated on the West Coast. The West Coast has really been, the bull of the entire freight market over the last couple of months, and they still are having trouble finding capacity out there. Again, as we see a lot of the freight flow to the East Coast, a lot of trucks sitting out east, not necessarily as easy to recover from. Those volumes coming off the West Coast going back west takes a lot of time to get back out there because there's just not enough east to west freight to recover out there.
We have a couple comments here. Amanda Miller, going back to the article on distracted driving, surprising that driver's distractions is lower than age. And then Tom Curry, SVP over at Kingsgate, curious if the ease of restrictions on randoms, drug testing, has any impact on driver turnover during this time, since onboarding would still require a test. Very interesting points that we have coming in on that. I have a question for you, Zach, though. When you look at Texas, Florida, California, Georgia a little bit, maybe some restrictions going into place on businesses, probably not a complete shutdown like we went through a couple months ago. Do you see that having any impact on freight volumes in those areas?
It doesn't appear to as of yet. I think we're still a little bit early in the cycle. I think trucking companies are now just starting to see, a little bit of hesitation. We have been on this kind of bull run for a while, and just recently we read a report, by Morgan Stanley talking about how trucking companies now, for the first time since they started issuing this weekly survey, are starting to actually acknowledge the fact that they are seeing some disruption in their operation due to variances in how states are handling the shutdown processes. We haven't seen it reflected in the data as of yet. And again, a lot of our volumes are down across the board, in general. So it's really hard to discern whether or not this is, more of a seasonal aspect, or is it, some of these shippers starting to show concern. I think it's probably more than likely a seasonal impact right now. I think that type of impact won't be visible clearly until late July, early August even, as some of the carriers start to see a little bit more disruptive behavior. Again, the uneven shutdown process is going to have more of an impact on it than a straight up shutdown would, I think, in general.
Yeah, I think the point is we've never been through a startup, and now we have some pullback a little bit, and how deep that pullback goes and how it fractures the markets, et cetera, is going to be.
It kind of reminds me of Lawrence, who will be on here in a few minutes. Alvarado, whenever we talked to him a few weeks ago, it's been maybe 4 or 5 weeks ago. He was talking about a W style recovery with
sequentially
starts
smaller.
and pulls, sequentially starts and pulls in different areas.
I think that's fairly accurate. And Zach, when you were talking about earlier where the freight levels are, we're seeing them drop, and right now in this week post 4th, as we normally see it, there's this trough, and you can see that the trend is down, and it usually isn't that it continues to go down. It usually starts to stair step up, but it is definitely down. But we're still at this particular moment just below the peak of 2018, at what appears to be the bottom of the trough, or could be the bottom of the trough of this holiday week. So it's really going to be telling to see how this week trends, and then really next week to see, is that first wave through this, and are we into the first downward movement in our series of W's or a reverse square root type of recovery? Does it come back, like you said? And I tend to agree. I think August 1st, end of July, August, or so on, is where we start to see, okay, where is this normal going to start happening? And is that at 10,000? Is it 9,500? Is it at 11,000 on the OTVI? I think that's kind of what we're looking at. Would you agree with that?
Yeah, I think we're at the first part. I mean, we're still not through the full impact of the virus, obviously, and I think obviously the restriction in the state have less to do with the shippers and more to do with the carrier activity and operations. So, how disruptive is it to the carrier operation flow is more reflective in the rejection rate than it is in the volumes. And right now, I think it takes far too much effort and energy for shippers to vary their behavior to see anything that's really, in terms of near-term regulations and how states are opening and closing. I think that we're way too early in that process to see it just yet.
Very interesting. Let's switch gears and look at produce and the reefer market and how that's going along this season, Zach.
Yeah, so we're still seeing upward rate pressure on the spot market side coming off the West Coast. The Mexican border freight is still showing some elevated levels, although not as significant as out west. I think the dry van activity has actually propped up some of that reefer volume as well, or reefer activity as well, keeping those spot rates a little bit more elevated on the dry van side and the reefer side. Capacity tends to move hand in hand on both modes there, but again, we are starting to see a little bit of a degradation in terms of volume. How long does produce season push into July? Typically, it doesn't last throughout the entire month. There are signs, at least on the contracted freight volume side, that some of the rejection rates should start to smooth out here more recent, in the near term. Although the West Coast, I think our outbound rejection rate in Los Angeles right now, over 42%, which is tremendous. That's just an indication that produce season is still having a really strong impact to the market out there. Rates from San Francisco coming back east, going into the northern tier of the country, still remaining very propped up. They keep increasing $100 to $50 every week. Not a huge spike, but again, a very consistent increase week over week.
Very interesting. It does sound like the West Coast is still on fire and will continue for a while. Thanks again for your insights today, Zach.
Thank you, Zach.
Once again, that's our Director of Freight Market Intelligence here at FreightWaves, Zach Strickland. And now we switch to the...
What do you want to talk to? PPP?
Yeah, let's talk about PPP.
Yeah, you got some notes on that? I've got it pulled up on my screen. If we want to show that to the audience here, I can show the table that you can find the link to on FreightWaves.com.
So the administration released names of companies yesterday morning, and these are companies that borrowed at least $150,000 or more. Covers all industries. It's a huge file. Took me about 10 minutes on my computer to download the entire CSV.
Yeah, you can hit the link right through FreightWaves.com, or you can download the CVS.
You can download the CSV, and we've parsed that to where it's only transportation companies, and it's not all the NCAIS codes. I believe that's the correct acronym for that. Of transportation, because there's so many.
North American Industrial Classification System.
Yeah, exactly. So you have all this data. We have about 13,000 records in there of the major primary transportation and logistics codes.
So some of the high points that were in the articles that you can find these links to, right? Because there's a couple in there. Was that loans less than 150,000 were the vast majority of the loans in number.
It was, yes,
but only about 25% of the total funds.
Yes. Yes, and those aren't included in this database.
Right. It's so you won't find those. So 150,000 above, right?
Yeah, it goes. I think the highest category is 5 to 10 million. Right. And if we can throw that up once more,
I can show them. I can kind of click through how you can do this.
So that's the page we have on our sidebar on FreightWaves.com. Just right below the top stories, we have a blue icon here, big lettering. Thank you, Billy. Click here to search the PPP database. Yeah, and you follow that link. It'll take 2 or 3 minutes to load because it's such a large database.
Right. So in this database, you can search, right? In the upper right-hand corner,
Yeah,
where I've
you
got
can
my
search.
clicker right here. You can search, or you can click on any of these headers and then sort. So by loan size, business name, city, state, NAIC, right? Mm-hmm. Business type, number of jobs retained, date approved, which is important.
It is, yeah.
It's 24 weeks after that, right? They've got to spend those funds. And you've also got the lender inside there. 800 3PLs received $150,000 or more?
I believe so, yes. At least 800.
And 3,200 trucking companies.
At least 3,200.
At least
trucking.
3,200.
Yeah, those were breaking headlines, and it goes by those codes, the North American industrial codes, which are hard to read, hard to put together, hard to make sure that you have all the information, because there's others.
Well, there is, and if
you have technology companies,
if you've been in an LTL, and you're
exactly
the NMFC, I could make an argument to put under one code, and you can make an argument for another code.
You're exactly right. And we're still parsing through logistics or actually freight tech companies, because those codes are much different usually than transportation, trucking, logistics, warehousing. So we're still working on that to kind of go in and search through the PPP database for all of that. So once again, FreightWaves.com, just on the right side of your page, right below the top headlines, we have a nice blue icon right there with large lettering, and you can go directly to FreightWaves.com.
Beautiful. So check that out. Right now, we welcome Lawrence Alvarado, CEO and founder at WareCap and professor at the Tim and Steph Bush School of Business at Catholic University of America. Lawrence, how are you, my friend?
Gentlemen, good to be here, and also love the PPP loan program table. I've been parsing through that. So, yeah. And, we in Washington actually have a more drop handle name with that. We just call them NAICS codes. So.
Oh, NAICS.
Oh,
there
NAICS.
You go.
Okay.
Yeah, that'd be easy for
NAICS.
Kevin. He can remember that a little easier.
Yeah, I love how you were just formalizing the whole thing, though. It was very, very inspiring.
Yeah,
I know.
well, you put a coat on and things change, right?
Things change. It's really important, right? Yeah.
They do. So, little background for people who haven't caught you on a previous episode, and give us an update on what's going on in your space.
Bet. So we at WareCap, we kind of consider ourselves the Airbnb of the industrial real estate. So short-term and flexible fractional real estate. And what we have seen, since we last chatted, and I appreciate the kind of W curve reference, we're kind of seeing that in action. We absolutely are. First of all, we saw industrial real estate at historic highs, mostly because things just weren't moving. Everybody is holding on the warehouse. But now as supplies are unlocking, and I love the part about, Zach was talking about just the uneven releasing of and opening of some of the states. It's creating so much uncertainty that people are not wanting to go ahead and put in investing in some of the capital requirements for warehouses or parking or whatever the case is. So that pressure, especially now as we get to the seasonality of the warehouse space and all this industrial real estate, is really coming to fruition. We see it, in particular pressure points. The southern border is definitely one of the areas. We're also seeing rural areas really coming into a need. So economic development agencies and corporations are really coming to us and benefiting from this. And then also on the enterprise. So think U.S. Postal Service or Walmart and that. And I think what's interesting is that we're also going to see another tick up in the sense of demand. We've seen a lot of the jobs within this industry kind of coming up. We're getting back into the point where, we've had, 60,000 jobs that were added over, kind of the May-June timeframe. We've seen a lot of these jobs coming in, but we haven't even gotten to the part where schools and school reopenings and the ability to kind of get back into that realm is going to have a profound effect on this. Now we're going to have perhaps vacations that get cut short but now we're going to have perhaps a little bit more retail in spurring on. So anyway, the point is lots of last mile vindication, lots of needs for short-term and fractional industrial real estate, and we're here to ride the wave. So, that's what we see.
It's interesting, Lawrence. So in your space, you're saying I want to kind of dig into this a tad, just make sure I'm understanding it. Is what I meant, or what I took away from what you were talking about for that demand and the lack to spend that capital on warehousing, parking, what have you, right? Is that this flexible type of space, this is really doing well right now and strong, and is kind of an indicator that maybe companies and industry aren't so confident in the long term of the economic uptick that's going on right now. Is that right?
Yeah, I think there's a lot of toe dipping in certain new markets, or even in markets where people are familiar. So you're absolutely right. I think that if, first of all, I like going back to the flexibility and, your kind of what your table was talking about. I want to kind of go back to that and the NAICS codes and the fact that you certainly don't have 100% certainty on, how do you even contain, how do you even identify these organizations and these companies, because as you mentioned, technology companies and others don't even fall under these types of things. So you have this trickle effect, this expanding effect of just impacting companies on this. Number two is the fact that the processing of just getting through the grants. So there is, the administrative side of virtually everything. And so when you think about the fact that they don't know where the revenue is coming. You don't know if there's going to be a third or fourth or fifth wave of coronavirus. You don't know even if there's going to be any type of programs that are going to keep up with that. There is no way in the world that you can do accurate revenue projections and actually have the appropriate capital allocation for these things in the future. So it begs for the short term. It begs for finding things that you never would have thought of before. But it also unlocks the market that is hiding kind of in plain sight, the 5,000 to 10,000 square foot that nobody really thought of before. So that's kind of what we're seeing.
Do you think that's the largest leading indicator that you're looking at for getting past the W recovery that you're seeing is CapEx spending and kind of the sentiment toward business and capital investments?
Yeah, in terms of the short-term real estate, we certainly see the CapEx. I mean, what we're seeing is that a lot of the smart money is obviously buying lots and lots of industrial real estate, some of the warehouses and parking especially. But what that does is that these are the large REITs. These are the big portfolio holders. They're not necessarily the ones that are dealing at the sub 15,000 square foot. Those folks where the market pressure is pushing up those rents higher. So now, we see a lot of people that are going to create less of their spend on warehousing and distribution and more of their spend on the actual operations. So how do you actually reconcile that? That's kind of what we see.
Understood. Going off that. So you're in the warehousing space. How do you see, what are your expectations for the holiday season or Q4 this year and the demand for warehousing space?
Yeah, we're going to see it actually. We believe it's going to go up. We see an uptick. And it's primarily because of that kind of last mile area. But what we're not going to see is the single companies that require 250, 300,000, that type of requirements. More localization, more warehouse and parking, and also yard space at the local level. Therefore, it's going to be much more important to have a distributed view of where this industrial real estate is coming from. So in other words, people don't even know what they don't know or where the supply exists. So that's kind of what we're trying to do, is kind of scrape and make sure that is visible to the user, because the user base, I believe, is actually going to be far greater. It's going to expand, the demand basis.
Yeah, that's an interesting point, and it really speaks to what I guess the fractionalization of the markets, right, as well as assets, right? It's still the new norm of how that last mile, like you said, and those small regional supply chains operate, right, and the demand for those. That's really what you're speaking to, right? As far
That's
as
correct.
that demand,
we see all. Yeah, absolutely. We totally see that. And if you think about how again, going back to Zach and talking about the uneven openings, how, again, you have to de-risk your supply chain. And if you're going across multiple states, then what does that mean? And how do you actually kind of create the last mile fulfillment aspects of that? So, yeah, absolutely.
Yeah. Yeah, I can see that. You've got this large warehouse in a state that is now going back into contraction. It's smarter to have smaller spaces around so you can react more quickly and not have basically orphaned inventory here. And then it would cost you more to move that around. More flexible supply chain as the uncertainty of markets opening and closing and so forth. Makes sense.
That's right.
Yeah.
Yeah, that's exactly right.
Well, thank you again for your time. It's always a pleasure to have you on the show, Lawrence. And how does our audience reach out and contact you and WearCap?
Great. Yeah. So wearcap.com. Of course, we're live and getting things done on that platform. You can find us on LinkedIn, and of course, you can follow the links to you great folks on your program. So thank you very, very much for having me.
Always a pleasure. Thank you very much. Again, that's Lawrence Alvarado, CEO and founder of WearCap.
Yeah,
it's always interesting.
It really is, and it's one of those areas that what he's seeing in his business really is telling about what is going on. And it really points to that diversification and the disparate data that you really need in this time to figure out what is going on and where things are going in the medium and long-term future. Right, and how? Because according to what he's talking about here and what he's seeing, if that continues and he's right, what he's looking at, the fractionalization of the markets coming on and coming off, as Zach spoke to, it is really the supply chain from the carriers, the capacity providers' perspective that is going to be disrupted and is going to show it. It may not be the volumes. As we spoke about before, maybe you have some insight into this or a thought on this as well. I contend that volumes will come back down. The backbone economy is not there to keep us at the highest level we've seen in 3 years. It's just not. So when that comes down, I don't necessarily see that O-try or the tender rejections in capacity just suddenly absorbs it all and goes, because things are going to be fractionalized in movement and getting those capacity in the right area. So it may actually sustain.
It may, and it's great to have Lawrence on, because back when the freight volumes climbed up 30% year over year, and then they fell off a cliff, and we started seeing a little bit of positivity come out of that. And Lawrence came up. We were asking everyone, is it square root recovery? Is it normal? W or not? A U, V, square root, Nike swoosh. And he came up with the W, where you see starts and stops in different areas of the country, and that is bearing out perfectly right here into this W. So it's always interesting to get his perspective.
Yeah, absolutely.
Yeah. But joining us right now is Tyler Robertson. He's the CEO of Diesel Laptops. How are you doing today, Tyler?
I'm doing awesome, guys. And when Dooner calls for me to be up, I am here. So thank you very much for inviting me.
So it's his fault.
It's always Tim's fault. Always Tim's fault.
Hey, Tyler, can you let our audience know a little bit more about Diesel Laptops and yourself?
Yeah, absolutely. So I'm the founder. I started this company 5 years ago in my garage and dining room table. We got about 150 employees now, and we do pretty much everything to do with the repair side of it. So we sell diagnostic tools, our own and other companies. We have diesel technician training classes all over the country and online. We have a call center staff with diesel techs and IT pros, and we build all of our own repair information. So we kind of go to these people that are trying to repair trucks and give them a full solution instead of just a piece of the puzzle.
So do you look at the data post for specific companies, et cetera, like large carriers or asset providers that have their diesel engines being worked on, et cetera, and kind of that post analytics of here's the trending on your specific engines in this region or that region or across the fleet type of thing?
Yeah, we do. And our company really got started grassroots. I mean, I was selling these things out of the trunk of my car literally, years ago. So most of our customer base is those independent repair shops. And we always kind of come from the side of the technician. What problems do they have and what do they see? But yeah, we catalog every fault code search in our database. We catalog what fault codes occur at what hours, and we catalog all the fixes for those things. So we get all that knowledge, and all of a sudden we got some really good data and information to help people fix their truck quicker. And that's really what we try to accomplish through everything we do at Diesel Laptops.
That's very interesting. I can see where that's very useful from both ends, right? Inventory of parts, et cetera. And when you have specific trending data, that type of stuff, it can be incredibly useful.
Tyler, where are you based out of?
So we're in South Carolina, and you made a great point about parts, because that is a $34 billion industry, truck parts. And people don't realize it still operates a lot of the way it did 30, 40, 50 years ago. When someone finds something broken, they have to pick up the phone and they have to start making phone calls and try to find that part and source it and do all those things. And the e-commerce side's really not been there for the commercial truck parts industry. So that's one of the pieces that we're working on our Diesel Laptops. If people are using my tools, they're using my repair information, let's also tell them what part they need to buy without ever having to call somebody. So those are the things we're trying to string together to improve that repair process.
Excellent.
Right. And now you announced on LinkedIn earlier this week about doing COVID-19 testing for all your employees on a weekly basis. Can you let us know a bit more about that?
Yeah, so I mean, we're in South Carolina. Cases have definitely sprung up and got hotter here. There's more of them happening. We're definitely on the growth side of that curve, unfortunately. And we needed to bring back some employees. There's only so much. We have so many new employees. They're not trained up. We have production. We have warehouses. You need to have some people here. So we started bringing people back. We did the temperature checks and got rid of touch points and cleaned the office a couple times a day and all those things that we had to do. But we got kind of fortunate because University of South Carolina, they're trying to get back to classes here in the fall, right? Like a lot of universities, and their plan literally appears to be to test, 30,000 people every week and try to get the ones that have, the COVID, away and that whole thing. So one of our employees, her dad works on one of the labs that's doing this. So they got us on this program here where we literally are testing every single employee every week and just trying to help mitigate any potential spreads that happen not only inside our company but everywhere else as well. So it's a new approach for us, and we just started our first testing this week. So we're off to the races with it.
That's awesome. So so the testing is it daily test? Oh, weekly testing, right? And they get the results back in 1 to 2 days. What I found really interesting in there, though, Tyler, was because nobody's ever spoken to this before, and it's interesting. I'd like you to kind of, if you can, expand about it a little bit. Is a blood drive? Yeah.
So American Red Cross announced recently that if you do a blood donation, they screen you for the antibody for free as part of it. So our HR department got with one of the local blood drive banks around here, and they're bringing a truck in, and we asked for our employees to volunteer. They all get paid for their time. They get the antibody test, plus hopefully they're saving a life. And I think they're actually getting a $20 gift card as well from the blood drive. There was a huge shortage that's been happening in that whole space, which is starting to clear up. But we thought it'd be a good thing to do, and a lot of people I think are curious to see if they have the antibodies or not. So we'll see.
Yeah, that's interesting. I think anybody listening to this, I would check that type of stuff. I've not heard of a blood shortage, but it makes sense that there would be during this.
It does make sense. I don't know if that's nationwide where you can get antibody screening.
I don't know, but I would check it out. I would check it out.
Definitely makes me want to go out and donate blood.
Yeah.
Now.
Yeah, exactly. So in your estimation, Tyler, I mean, what responsibilities really does the employer have for providing that a safe office environment? And obviously you do. There's OSHA and so on and so forth, and you've worked in diesel mechanics and situation, that type of thing. So you've got to adhere to specific safety guidelines. But how has that changed, and how are you getting there besides the testing? I mean, obviously the testing is a huge thing, but...
Yeah, it's a really tough one because, say we test everybody and we test half the employees on Monday and half of them on Thursday, and they kind of rotate through. But what do you do when one's positive? We don't want to shut down the whole building. And that's kind of the point of this is let's find it before they've been here for a couple of days, take care of it right away. Our first run we did, we had the results back in 8 hours, which was great. So we're able to make decisions very, very quickly. And one of the other things I think a lot of people aren't realizing is I think the school system is in for a complete disaster this year. They still haven't announced plans. We're in South Carolina. they told all the parents here, we're not even going to announce our plans for 20 days before the school season starts. And that puts everyone in a mad scramble. So I actually hired an elementary school teacher for diesel laptops that we're going to turn one of our areas into a classroom.
Oh, wow.
Because we have parents here that we have some that both the parents work here, right? And they have kids. And what do they do when there's no school? And if schools are shut down or half days or whatever, it's just going to play havoc on people's work schedules and how do you take care of them? So I'm like, well, let's go hire an elementary school teacher. Let's put him here and let's try to figure this out and make it a little bit easier on everybody this year.
So you're going to have an actual a classroom there with a teacher for your employees' kids.
Yeah, it's for elementary.
That's tremendous.
So K5 through sixth grade, and we actually, we have capacity to about 15. I think we had about 20 kids that may want to be in it, so we're gonna have to kind of figure that out, or hire an assistant, or see how it goes. But at the end of the day, what really happened is, you know what? I realized about me and my wife, we are not school teachers at all. So we weren't about to go through another school year of that whole thing. So that got the idea kind of rolling. So I give my wife total credit. And I think it's a great perk for the employees that are here. And I think it's going to be very well utilized during the school year. And I think it helps diesel laptops at the end of the day.
Yeah, I think it will be, because even on those days where the kids are virtual, right? I mean, that's what they're talking about in the school district where I live. Now, my kids have been homeschooled forever, so it's not a big change for us. But if they go back for only a couple days and then they're out for a couple days, they could actually still, the employees would have to be home with them while they're doing their virtual learning. Now they can come to the office and actually do that virtual learning in this educational lab, if you will, that you've put together. Tremendous stuff.
Yeah, exactly. And our concern is too, the kids do go back, but what happens if a school teacher gets sick, or a bus driver, or anybody, right? Are they going to shut the school down? Are they going to let them go? How's it going to work? And it's just our way to try to smooth out that bump that we know is going to happen this school year with the elementary school kids.
Yeah, absolutely.
Yeah, and Chris Jolly says that it's great to hear. What a resource for your team. That's the freight coach there.
Yeah.
And we have a minute or two left, and just wanted to get your thoughts. Dooner actually says that you posted a couple weeks ago, we've seen a V-shaped recovery in all aspects of our business, and while we took the foot off the pedal slightly during this, it is time to get back to full speed. Do you still feel that way?
I do. I mean, March, it was scary, right? Nobody knew what was going to go on. April was not a good sales month. Our sales dropped, 35, 40%, somewhere in that ballpark. But then May, they came shooting right back up again. And we had a very, very strong June, and July starting out like a rocket. So I see what our customers are doing. We watch our volume calling into our tech support. We watch the number of searches on our website for fault codes and labor time lookups. So we monitor all this activity. And we definitely saw it plummet, and we definitely saw it go spike right back up. There's another company out there called KEA Advisors. They advise dealership groups. They publish a weekly chart on their website that shows repair order traffic coming through repair shops. So you look at stuff like that, and there's other companies that have their own dashboards they put out, and everything I'm seeing is really, really strong. People were afraid to buy in March and April. But it appears in May and June and now in July, not the case. People are a little more, I think, optimistic and not as cautious. And I mean, we're selling $10,000 diagnostic tools is kind of our bread and butter, right? Those are capital expenditures that people are now saying, yeah, I'm willing to part with that money and I don't need to keep it. So it's good to see.
That's
That is good to see. That is really good to see. Thank you very much for your time today, Tyler. How do people reach out to contact you and find out more about diesel laptops?
Yeah, so just Google diesel laptops or diesellaptops.com will come up right up there. I am active on LinkedIn. I'm on there all the time. So just go on LinkedIn and search for Tyler Robertson and maybe put the word diesel at the end, and I'm sure you'll find me.
Great. Sounds
excellent.
Great.
Thank you, Tyler.
Awesome.
Really cool stuff.
Really cool stuff, yeah. Really cool stuff. I wonder, I hadn't heard about the blood drive and antibody testing before, but that should be interesting really to a lot of people.
Because I'm looking at what he posted on LinkedIn, and I noticed, okay, get the antibodies through a blood drive, and it occurred to me, wow, we've never heard anything about a blood shortage during this, but I imagine that had to be the case.
Well, definitely. I mean, everyone was basically in lockdown, so going to a health center or going to somewhere, hospitals, things like that, everyone didn't really want to do, no elective surgery. People were told to just stay away in a lot of ways. So it it shouldn't be too much of a surprise that there's a blood shortage, but something I just never really thought about.
Yeah, I mean, two big things that I took away there, aside from what Diesel Laptops is doing, which is really cool stuff in the data, et cetera. But outside of that, taking care of your employees, et cetera, and what is going on right now, the new norm of free will, and we don't need a crisis to help each other. But hired an elementary teacher, which is so his employees could come back to work, which is much cheaper than the non-productivity of having those employees at home, and then really assisting those employees with the blood testing for antibodies, et cetera, and helping out the Red Cross for blood a blood drive at the exact same time. Tremendous things.
I know.
Thank you, Tyler.
Couple comments here.
Those are excellent things.
Thanks to Robert Bussey for listening. And basically, it goes back to the warehousing. I missed this. Apologies. Do you feel increases in warehousing are a sign of a recession, or just a sign of the times to be more prepared within supply chain? What do you think?
According to what he was seeing in his space, because he's not the 300,000, 500,000 square foot warehouses. He's in the flex space, the smaller spaces, that type of stuff. He's seeing that tremendous demand because the companies can't afford to have orphaned inventories. We're talking about this, so they're using smaller spaces as the economy fractures and comes up, and we have these kind of pullbacks as we're seeing in specific areas, that type of thing. So yes. It's interesting. You can look at warehousing and how much there is in warehousing and read it one way, and you can read it the exact opposite depending on the other dynamics that are going on, the trucking dynamics, the import dynamics, the consumer spending, et cetera. You need more than just the warehousing to decide what's happening in the economy.
You're exactly right, yeah. Well, let's wrap this up with what's on the agenda for FreightWaves TV. What did you guys talk about yesterday on What the Truck?
Now I'm drawing a blank. We talked about a whole bunch of stuff yesterday.
You did. You had a lot of guests. I was kind of working and watching a little bit, but so What the Truck was yesterday. It'll be Friday as well.
So I mean, we talked. We kind of took a makeshift vote, but we talked about Hyliion. So we had Thomas Healy back on.
That's right.
Right? So we talked about Hyliion, and we talked about, really it was a lot to do with the electric trucks and what is coming on with these electric drivetrain trucks, I should say, really, because you're looking at the differences of the three, where you've got Tesla that is fully charged electric, the Hyliion, which is the RNG, renewable natural gas generator that constantly, regenerates or recharges the batteries, and then you've got, the Nikola, which is the hydrogen fuel cell. So they're different, and they all have their different applications. But it was, very interesting.
All right. Then at 2 p.m. Eastern today, Andrew Cox and myself and Seth Holm will be joining us for Great Quarter Guys, and we'll do a special episode on just long shorts. So we do a couple long shorts every to round off, close out each show. But we're going to do all long shorts. Maybe argue a little bit over stocks in the market and recovery. So that should be really good. And then 12 p.m. Eastern Standard Time tomorrow is Put That Coffee Down. Please send us, me or Dooner, on LinkedIn posts of your pics of your pets watching the show. So that's going to be a big thing.
Is that for Put That Coffee Down tomorrow?
Yeah.
So does the winning picture get a book? Is that what it is?
It is, yes.
Okay.
So Michael Nemi and Nicole Blair will be joining us. Michael Nemi is going to do a kind of a charity cold calling contest. So we're ironing out the details with him.
Nice.
And then we had Nicole Blair on a few weeks ago.
Nice.
And she's starting her own business. So we're going to touch base with her, see how everything was going. And then,
I'll be on with Sonar tomorrow afternoon.
That's right.
I'll be joining Luke tomorrow.
Very good.
Kyle Taylor's off. He's out looking for new Fun Shirt Fridays or something. Shirts for Friday. I guess he's shopping.
And then
but I'll be
2 p.m. Wednesday, right before sandwich between Put That Coffee Down and Freight Forecasting, or with Sonar, I should say, is Freightonomics with Zach Strickland and Anthony Smith. So they'll be talking about freight and economics. And then we'll be back here at noon on Thursday for our next Midday Market update. And then 4 p.m. as always on Thursday.
Freight Forecasting, And I'll have Kyle Lintner, Principal and Managing Partner at K-Ratio. And Daniel Stanton, Mr. Supply
Mr.
Chain,
Supply
will be
Chain.
on with me.
Very
Yeah,
good.
it'll be a good show.
Very good. Then Friday, another What the Truck, and then Saturday is FreightWaves Radio on Sirius XM with Junior, and 2 hours of nonstop fun and
Catch
and
everything
great
on
call-ins.
FreightWaves TV. Go to tv.freightwaves.com and subscribe today.
Yeah, or you can the audio version, the podcast versions on Freightcast, wherever you consume and download your podcast, whether it's Apple Podcast, Spotify, you can go find Freightcast and all the shows that we do here at FreightWaves. Any closing thoughts, Michael Vincent?
Oh, man. Too many. We'll see what's happening this week. We got to watch the freight markets this week and see how they pull. Do they continue to go down? Do they come back up? I think they'll probably keep going down.
Will July follow the seasonal pattern? I don't know.
Follow the
We don't
seasonal
know.
patterns.
But we'll be talking about it every Tuesday and Thursday on the Midday Market Update here at FreightWaves.
Right on. Peace and love, everybody. Have a great day.